In today's video, I'm going to walk you through a retirement strategy using Palantir and Leap options with two different approaches. If you're looking to maximize returns with a safe, structured approach, this video is for you. Let's jump right into it. First, let's talk about Palantir. One of the things I've noticed is that it's unlikely for the stock to increase drastically week after week. For example, the chance of it breaking $115 next week and then hitting $125 the following week is pretty low. Honestly, the odds are almost as slim as walking out your front door and having a comet land on you. But let's not get too carried away with extremes and take a closer look at the charts. To figure out where the top might be, we'll use the Fibonacci retracement tool. Aligning it with the lowest candle, you'll often see a pullback to the 50% or 60% level. For Palantir, we're expecting a pullback to the $92 to $96 range. As we've talked about before, around $95 seems likely, with a potential dip down to $90. This is where the strategy comes in. We're going to buy leap options. You can dollar cost average into these leaps just like you would with shares. I'll show you exactly how to do this with Robinhood. For the best return, I recommend setting your options to expire in November of this year. Why? Because I believe Palantir has the potential to reach anywhere between $130 and $150 by year end. To maximize returns, you'll want to buy options that have a 70 delta. This means that for every dollar the stock moves, your option moves about 7 cents. If you're feeling more cautious, you can go for a $140 strike, but with a lower delta of around 48. While it's cheaper up front, it'll have less movement and therefore less profit potential. The sweet spot is to go deeper in the money, which also gives you the chance to sell covered calls as the stock moves. Just keep in mind that if you buy a $140 call, you can't sell a covered call below that price unless you're okay with creating a spread, which is something you'll want to avoid if possible. Let's use a $36,000 account as an example. For example, let's say we buy 10 of these options costing us $36,000. If Palantir rises to $130, you're looking at a gain of $13,000. That's almost a 50% return. If the stock hits $150, you're looking at a 70 to 80% return. The profit could go as high as $28,000 depending on the movement. Even if the stock moves to $160, you could potentially double your investment, making about a 100% return. Now, let's break this down further. If the stock hits $130 by the end of the year, that's a 50% return. So, turning your $36,000 into $55,000 would be quite realistic. But here's where it gets interesting. As you sell covered calls on these leaps, you're actively growing your portfolio. The goal is to create a steady income stream by selling covered calls against your leap options. As Palantir moves, let's say it pulls back to $92 or $95 and then bounces back. This is when you can dollar cost average and buy more leaps at the same expiration and strike. This way, your position grows over time as you add more contracts. Here's a key point. Don't sell covered calls around earnings. I recommend avoiding selling covered calls in the week before earnings, the week of earnings, and the week after, about a 3-week window. This way, you don't get caught by surprises. If Palantir rises beyond $115 in the short term, it's unlikely that it will sustain that move. If the stock does go up to $118 or $120, you can always roll your options further out, say 2 weeks later. This is why you never want to sell covered calls too aggressively. You have room to roll them out and up for more potential profit. The chance of Palantir making massive moves of $8 a week consistently is incredibly low. For example, if Palantir were to rise by $8 every week, it would be almost $140 in just a month. That's not realistic unless some huge news breaks. Even if there is some astronomical news such as landing a massive government contract, you can always buy back your short calls at a loss. Remember, any loss on a short call is offset by the gains in your leap options. It's a hedged position. Now, let's talk about selling covered calls the right way. You want to focus on selling calls with a 15 delta. Why? Because selling options too aggressively could lead to needing to roll them out. You can also sell them on a weekly basis. For example, selling a $115 call for next week, around $12 out of the money, would be a good start. But be sure to understand that selling a 15 delta option means you are positioning yourself to make a safe but steady profit. Let's break down the numbers. If you sell 10 calls a week, you could generate $1,300 per week. Multiply that by 4 weeks, and you're at $5,200 per month. Over the course of 8 months, that's $41,600 in premium income from selling covered calls. If the stock goes to $120, that's an additional 20 to 30% return on the leaps. So you could easily turn your $36,000 investment into over $50,000. Up to $55,000, even more depending on how Palantir performs. This is an incredible strategy. It's not only a great way to retire, but it's also much more reliable than relying on the S&P 500 or other traditional markets. Many of my students have already used these techniques to grow their portfolios. For example, Josh started with $15,000 and now he's up to $40,000. Adam, in just 6 weeks, saw a 20% increase in his portfolio, growing it by $58,000. If you're looking to learn more and want to take your investing to the next level, check out my courses and coaching programs. You can sign up through my Discord community, one-on-one coaching, and more. Just visit investwithcorey.com and click on training. Even if you have a small portfolio, this strategy can work. For example, with just $10,000, you can buy 3 leaps, sell 3 covered calls weekly, and generate around $400 a week. Over the course of 8 months, that can add up to over $12,000, plus the potential growth from your leap options. As I've shown, even a $10,000 account can become $16,000. Or with a larger portfolio, $36,000 can turn into over $80,000. It's a strategy that really works. If you put in the time and effort, you can see substantial growth over time. This isn't just about making money fast. So, if you want to see how you can replicate these results and learn more, sign up for my program and let me help you boost your portfolio. Thanks for watching. Don't forget to comment below if you want to learn more about strategies like this one. Also, if you're interested in my coaching and Discord community, the link is in the description below.